The first interest rate cut by the Bank of Canada was not enough to rally home sales, but will the second one be? Braden here from Royal LePage at Little Oak Realty. Welcome to my housing market update covering June. And yes, we did have a second interest rate cut by the Bank of Canada this past Wednesday. And the question now is, will it have a tangible effect on our real estate market? I think it's a little too early to tell at this point in time, but there are some inklings that buyers are starting to come back into the fold. So let's jump right into the numbers here. New listings were down 9% month over month, but they are still up 3% over that long-term average, which indicates that we still have a greater number of new listings coming into the market, people feeling that urge to sell. Sales were down 13% month over month, which is a little unexpected given the time of year. And they are down 33% compared to the 10-year average. So this is the clearest sign that buyers are still on the sidelines, waiting for market conditions to improve and waiting for those interest rates to come down. Inventory levels were up 3% month over month and up 11% over the 10-year average. This is the highest number that we've seen, and it seems to get higher and higher as the months go by. So anytime we have a demand-supply dynamic where we have elevated new listings coming in and decreased sales going out, we do expect those inventory levels to rise, which they are. So that's not really surprising. But what is surprising is that prices are totally stagnant right now. If we have a market where we have abundant inventory starting to circulate, that is normally a sign that affordability will start to improve, but we're just not seeing that at this point in time. I think it's a bit of a tug of war between buyers and sellers right now, and so far it's been a bit of a stalemate. So one of the big questions that everybody has right now is, when will the USA start cutting their interest rate? The Bank of Canada can only cut their interest rate so many times before they're going to get hemmed in by the US Fed. So if the Bank of Canada cuts too much, what eventually will happen is investment money in Canada will start to flee to the United States where rates are higher, where they can get a better return on their investment. And that will have disastrous effects on the Canadian economy if it were left unchecked. So what the governor of the Bank of Canada will do is he won't cut that many times. They're saying they may only have as many as 3 cuts, and we've had 2 so far already. So it seems like there will possibly be 1 more cut before they're going to have to pause and then wait for the US Fed to start cutting. Now, the next meeting of the US Fed is coming up on July 31st. So if there's any news story that you're going to follow that one, because it's going to have some very real effects on our local and also national real estate markets. But anyways, I hope you enjoy this material and information I've presented here. And if you have any questions, please don't hesitate to reach out. Bye now.